Welcome to the Innovation Conversation, a podcast about innovators, both in business and real life. Hosted by myself, Ricardo Pascual, and Harry McDonough. This podcast is also sponsored by ODEF Tech. ODEF Tech is your premier software development partner. Make sure you check them out at odev.tech. The podcast is also sponsored by Notion.so. Notion is offering 6 months for free for new users. Make sure you check out our website, thestartupevents.co.uk, to redeem this offer. Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Diana Florescu. Diana, welcome to the podcast.
Thanks, Ricardo. Thanks so much for having me. It's a pleasure.
Diana, would you like to introduce yourself to the audience, please?
Yeah, of course. So let me see where to start. I founded a company called Media for Growth about 3 years ago. We are a media capital investor. We work with a lot of exciting publishers and broadcasters using their media space to support the next generation of consumer brands. And we do that by investing the advertising space from our media partners in these companies in exchange for ownership, for equity. This allows the brands that otherwise didn't think about going to TV or using brand advertising, or perhaps experience financial challenges, to activate this space and do it in a very optimized way, getting access to amplified reach and extending that operational runway. Maybe I can tell you a bit about myself and how I got into this space. So I'm actually not a media expert, or I didn't come from a traditional media background. I call myself pretty much an outlier. But I've seen some of the interesting challenges and opportunities in the space when I create a Media for Growth. But I spent the last 10, 15 years in tech. I worked in gaming studios, to then even having my own attempt at running my own startup. And so I know exactly how to launch, succeed to an extent, and then fail and close a company. So that, to an extent, helped tremendously to what we're doing today. And then through different experiences, I got propelled into accelerators and venture building studios and early stage investors, which at the time we were working with hundreds of companies, right, on an annual basis. There were networks of accelerators in many countries that we were operating. So I've seen a lot of the struggles that founders were experiencing building their brand. And here specifically, we're talking about consumer companies. Not that, of course, there's always inflection points and, challenges for any company. But when we're talking specifically about this consumer emerging brands, that's a specific sector that is still struggling in terms of attracting a lot of the VC dollars. Again, as an outlier to this space, I was like, okay, well, you are going to spend 40% of your revenue on advertising, just looking at the companies that we were working with at a time. But you're really struggling to fundraise, right? Or the fundraising is really slow. There must be something out there outside of, let's say, revenue-based financing options or venture debt, right? That could propel these companies. And then I started looking into this space. Obviously, media is a fascinating industry. It's a $750 billion industry, and you've got, so much innovation coming into the space, from retail media to TV, which right now is not just linear anymore. So I was like, okay, how can these brands, right, access what we call brand advertising, doing it in an efficient manner? So that's how Media for Growth essentially started. There are a lot of funds doing this already in Europe. So we're not the first ones. And we also initially built a company to be an association of media capital funds. But over the last 3 years, it's been such a amazing journey supporting these companies. We've done multiple programs. We have 24 companies in our portfolio of alumni in Europe. We launched now in the US. So it's a very fascinating place. I think a lot of these things also shaped me as a person. We talked about this just before we started the program, the recording. I was born and raised in Romania. If I bring this model to Romania right now, it's probably not going to fly. I think there's very different dynamics, as you know, between East and Western countries. Very early on, I left and I went to study in the UK, and then I moved different countries and been exposed to different experiences. Now sitting in New York, talking to you, and yeah, I think all these different countries, cultures. We talked about languages and how people react to when they speak somebody's language and how they think. It really shaped what we're doing today at Media for Growth, and also the ambition to support these companies cross borders and being a global platform, Media Capital Investments.
Did you find many differences when you moved from obviously from Romania to the UK, but then also from the business perspective from the UK to the US? Were there many differences, or actually business type of thing?
No, I think there's definitely differences. Although I think a lot of people assume, and to a certain extent, rightfully so, there's obviously similarities between US cultures and UK and Australian, right? Well, one thing is probably the language, but then leaving that aside, I think business-wise, it's a different culture out here. And I lived in Austin, Texas, speaking of countries and moving places. I lived in Austin, Texas for about 6 months back in 2019. A very fascinating place to be back then. A lot of people were moving down from California. Yeah, exactly. It was like becoming a tech hub. I was there again, basically 6 years forward for South by just two weeks ago. And fascinating how many consumer funds have been established in the meantime, how many more consumer companies. But then I think the one difference between US and UK, especially if we're talking about this industry and money and venture and so on, it's a market that has, I think people move much faster, valuations are much higher, minimum ticket sizes are much higher. We see companies like even coming to us, approaching us from a media standpoint, pre-revenue, raising $5 million on a valuation of like, I don't know, 20, 30 million. And you know this, right? You're
that doesn't happen in Europe.
You don't get that in Europe, right? It's a very different dynamic. I think investors are also a lot less risk adverse in this market. And then if I'm talking more specifically about media and media partners, so broadcasters, publishers, there's definitely a lot of enthusiasm and openness to start and to try innovation models like Media Capital. Europe is, interestingly enough, actually leading the space. So there's a lot of funds doing this in Europe, and that's where it started. But it's still rather slow at gaining, let's say, mass adoption or trying to convince some of the funds to do a lot more. And what I mean by a lot more is spending more, right? I mean, here we have partners that spend 3% of their revenue on just Media Capital Investments. We're talking about over $100 million a year, right? That's not, it's hard to compare, right? It's a bigger market. I think there's just a different appetite for risk and for doing business. And everyone is like, let's do business. It's very, very focused, very efficient in that way. And I think culturally as well, between UK and US, people are a lot more direct here. It's something that I usually I relate to, probably because of my Eastern European roots in a way. We tend to be a lot more direct. As you know, sitting in London, that's not always the case.
So, if you're talking with me, I'm always super direct, which is a good thing or bad thing, depending on
the people, I guess fellow Brits, right? Friends that you probably know, or So it's just, I think, there's plus and minuses everywhere, but I'm also trying to adjust to. So one thing that I was actually told recently is that we are not bold enough in the statements that we make here in the US. I'm like, what do you mean? And, like you raised $30 million to invest in these consumer brands. I'm like, yeah, but we got a long way to go. We're probably going to go up to 50 by the end of the year. In the UK, you don't really brag about these things, like you're like, okay, you don't. And here, it's a very different culture. It's very loud. People are like, we've done this, but equally they are very more open to talk about failure. This is how we felt. That's why we felt. And it's a good thing. People look at this is a good thing.
Over here, you cannot fail. You need to be successful. And I think the UK, they're doing a little bit better than most other countries, especially in Europe. But if you fail, let's say in Germany, it's the end of the world. I mean, you probably know this better than I do, but it's horrible.
Yeah.
You cannot be a successful businessman and have several failures. No. They all need to be massive successes. And that kind of stops people from innovating and people from taking risks. Well, yeah.
I agree.
I was curious. I mean, the transition, obviously, we discussed it.
Yeah.
On a personal level, how was there anything that really shocked you, apart from the way that they're obviously more direct and more willing to take risks? Was there anything that you really I don't think I can do this, or actually I'm very comfortable here, they finally speak my language?
Here in the US, right? Moving out here. I would leave politics aside because I think we don't want to make this.
Yeah, of course, no.
We don't want to make this podcast about and also because I think it's there's a lot of negative headlines in the news already, as they are. I think we don't want to add to that. Something shocking, I think. I wouldn't say shocking. I think it's in a way it's also probably just a really nice surprise about, I think, the openness of media companies when it comes to, I mean, again, we're a fairly new brand in the US, right? We don't really have an established presence here. We're building that. And yes, we've got this fantastic win and closing the initial close of 30 million and having two fantastic media companies as our LPs. But then US is such a huge market, so fragmented when it comes to media. And even so, you get into, I get into I get into meetings with like C-level people sitting down and listening to you and really thinking about this model. And the surprise, which is not shocking, but it's a nice surprise, is that we haven't really received a no in terms of investing with us, but rather, is it a good time now? Or, there are always companies that are more innovative or like they want to be the kind of the early adopters, right? Clearly, companies like Sinclair or Televisa that have done these investments and they invest with us. But there's other publishers that understand the value of this and they just probably just want to see, okay, I want to see a bit more traction. I want to see how this model evolves before I kind of like dip my toes, which is good and bad, right? You don't want to wait too long because then it gets all completely developed. But I think it's been really fascinating compared to, let's say, UK or other markets in Europe, that it's been a lot slower. The adoption is a lot slower and it doesn't always make it to the corporate agenda. It's like, oh yeah, it's something that we think about. Where here is like, okay, how do we diversify revenue, right? How do we accelerate growth? Everyone is about growth, business. And as long as you can articulate how you're going to make business, how you're going to drive business for that company, then you're basically kind of in the game, right? So I think it's a very transactional, but very useful culture if that's what you're in for, right? If you're here to do business, then people are down for doing business.
Do you think there's a bigger desire for growth overall in the US compared to the UK, for example?
Yeah, I think that mindset has never changed. I think that mindset has always been with the American culture and it's always about growth, a lot more growth. Although we're seeing, obviously, growth also comes from very, interesting places right now. We're looking at a lot of Australian companies, for example. I think there's a lot of very interesting Australian listed companies actually launching in the US. I think we're also seeing a lot of growth from let's say France or Germany or Central Europe, Poland, that is becoming more of a tech hub. But I think nothing changed, I think, in terms of the growth mindset that you have in the US.
So would you advise like a startup to move to the US if they want to get bigger?
That's a tough question because it doesn't suit everyone. And I think, especially for what we do with Media for Growth, one approach that we would take, because we do support a lot of international companies coming into the US. In fact, majority of our conversations and pipeline originates out of Europe because that's where we did most of the work. We normally see companies thinking about US and then going to New York first. That's kind of like, for them, US is New York, especially as a consumer brand, right? That's the first stop into the US. I think it depends on, I think a lot of companies make that mistake too early on into the journey and don't have sufficient funding or branding expertise or people on the ground to make it happen. And the other danger is to try to assume that US is one country.
Which, yeah,
and
it's not, I mean, it is obviously, but it's not at the same time. Different cultures.
Culturally speaking, I'm also learning this myself, right? I think culturally speaking, the way to look at it is almost like three different sort of parts of US. You've got East Coast, West Coast, and then kind of the southern part, which is also culturally different. But I also think that the way to, trying to conquer US, even if we're thinking about an advertising campaign all at once, it wouldn't be just a mistake. I think would be very, very reckless. So the way we're looking at this, and what I would probably advise a company, if they are really sold on the US and they have customers in the US and they're trying to build a presence in the US, try to look at it and do it almost market by market. And we normally have a lot of our media properties and exposure in East Coast and West Coast. And I think that's actually a really good test and launch pad, right? Try New York, try in the market, do that, experiment, and then try to scale faster into other states. But yeah, I think there's a lot of interesting places outside of the US where a lot of startups go to right now. I think there's a lot of interest in Southeast Asia, Singapore. Obviously, Middle East has been also growing a lot. India as well. India, although it has, of course, challenges like culturally speaking, and the language is such a, it's a tough one to crack. There's so many dialects, but although we still see probably 3 in 5 calls with companies, they do want to go to the US. That's the big goal in the end.
Yeah, I meet a lot of people like that. Their main goal is how do we go from the UK to the US? Because obviously people are just aware that the investors will put in more money. It's a bigger market, and if you manage to get into that market and you manage to get, let's say, be very successful in New York, you're actually doing better than if you were successful in the UK, for example, because it's just a much bigger market, a lot more people. But yeah, it's always a challenge, isn't it? Especially for early stage startups, like, how do I even get started? It's a bit of a gamble. Do you think, from the investor perspective, do you think US investors are open to listen to European companies? Overall, they actually sit down and say, it's a good idea, let me put some money in. Or they actually prefer if you just move everything to the US and then just operate in the US.
I see. I think there's kind of just probably two sides to this. I think there's a lot of investors that are definitely looking at innovation coming into the US market. So very open to discussing to European companies, especially when it comes to companies that come with heavy IP, deep tech. There's a lot of, technologies originating out of the European market. And naturally, as you said, a lot of these companies are drawn into the US because of the investors. Whether investors would ask the company to relocate to the US, I think it's probably right to assume that, most of them would ask the company to probably relocate and change headquarters to the US. I would also think as a brand, why wouldn't you? Right? If that's your big market, and in the end you're thinking about where you're going to scale, like whatever technology you have or consumer product you have, if that's your biggest market, then that's probably where you should be. Unless there are specific reasons. I mean, sitting in the UK right now, if you have UK listeners, we have a lot of interesting schemes for investors like SEIS and EIS. That of course comes with its own set of limitations, right? You got to have the company headquartered in the UK. But you got to put things into balance, right? Do you want to raise, 5 million through EIS and have the company in the UK, but it's going to take a lot longer, perhaps, or it's a slow process for you? Or if you want to move to the US and flip the headquarters to the US and have access to multiple investors, if that's the case. So,
is there any such scheme in the US or something similar?
I think there is actually. There is, and I don't want to butcher his name, but there is a scheme for small businesses. It's not as attractive as EIS and SEIS. So you don't get, I think investors get a certain percentage, but I believe it's not in a form of tax relief. I think there is another incentive for them. But there is one scheme called for small businesses investment scheme. I think EIS and SEIS has been a game changer for the UK startup ecosystem. We are actually SEIS qualified. The company is only 3 years old. We still have the SEIS allowance and then rolling into EIS. And I've seen markets, I think Poland actually tried to replicate that scheme about 4 or 5 years ago. So a lot of more markets are starting to notice what the UK has done. I think it's now coming up to 10 years or so since the scheme has been in place.
It's a really good scheme as well. I talk with a lot of European companies that want to move to the UK precisely because of the scheme, because the risk for investors in their native country is always very, very high. Whereas in the UK, of course, they can offset a little bit of that risk by being part of the SEIS scheme. So that's a good system. I was actually in a lecture yesterday, and with the former Chancellor Philip Hammond, and he was saying one of the biggest issues the UK has or is struggling with is when a company reaches a certain size, Series B, Series C's, they're normally trying to go to the US market and not stay in London anymore because it's not going to be as profitable. What do you think Europe needs to do to actually have the company stay here instead of moving to the US?
Right.
I'm sure there's a lot of things. By the way,
we could probably do a whole webinar just on that. I think there's so many, I think, pillars to this, from changing investors' mindset to governments being a lot more bullish to when was it? I think a few weeks ago that the Chinese government announced, I think, over $100 billion fund to invest in AI. That just completely, just puts a lot of the Western countries sort of like at shame when it comes to the level of capital deployed into new technologies. I think it's also that when you reach that stage, and depending on what market, like what kind of, especially if you're a deep tech company, for example, or if you're building a medical device, right? There's a lot of funding that you also need to get started at first, which is not that easy to access sometimes in Europe. There's a lot of schemes that are supporting this, right? As you know, there's EIF as well, the European fund that has been backing a lot of different initiatives, accelerators, and so on. I think, I think a lot of the investors in Western countries should. Well, it's easier to say to replicate the mentality and what we have here in the US, but I also think we're actually getting there. I think if I look at the level of, the size of the investments or the valuations, that gap is still a gap, but that gap is starting to close a lot more. There's actually a lot of interesting Crunch-based reports that have been published which actually show that compared to 10 years ago, where you see a massive discrepancy between how much a fund would invest, in a Series A here compared to the US, right now that gap is basically closing. I think that what I see a lot of companies still struggling, and even if I look at Media for Growth, we're a company, we're essentially bootstrapped. We have just very strategic advisors that have been that are invested into the business. And if I look at the board that I'm running, we're actually we don't have, and the company is headquartered in the UK. We don't actually have a British person on the board. We're a very diverse team, and I really love that. But it's actually all the investors and the support has actually come outside of the UK, from France and Germany to having US, advisors. And this is something that, looking through cap tables and so on, I see a lot of high net worth individuals and investors in UK companies that are non-UK, right? So how do we get
a lot as well?
Yeah, how do we get more UK investors, in these businesses? So, I think there's a lot of different strategic pillars that have to be activated.
Interesting. No, I'm curious on one thing, because obviously there's a lot of startups listening to this. I'm curious on your own journey and how you managed to move from one thing to the other, and then being in the place you are right now. I mean, it must have been quite hard to do all that. So, what do you do when when you're doing things that get hard? Like, what keeps you pushing
What
forward?
do Right. Well, probably the first instinct is to just, I'm sure we all have, those really low days, right, in the journey when, especially when you're building a company. I think the hardest thing for me, when I started the business was, there's many challenges, and I think all of them kind of combined created this interesting storm. One, you're in a space that naturally is challenged and challenging. I can't think of an industry that is being more disrupted than media right now. Anywhere you look, whether we're talking about just TV and then TV itself is disrupted, or if you look at the broader media landscape, there's so much disruption coming from all different angles, retail media, measurements. If you are a CMO of a consumer brand, I mean, those guys, I think they're having the toughest time right now, trying to create an omni-channel strategy and trying to make the case for marketing in the boardroom. So that was one challenge for me. I think initially just kind of wrapping your head around the media space. Another challenge was starting a business also with, if you are bootstrapped, and companies listening to this, they probably know exactly what I'm referring to, but obviously you're always kind of in that kind of cash preservation mode. And it's good because you learn to do a lot more with less, and you get a lot of resilience, and you build a company which is, I think, fundamentally a lot more stable and a lot more healthy, I think healthier in terms of reaching profitability, as opposed to having building a company at an idea stage, already being funded, having a few millions in the bank, and then you have a different kind of appetite for risk and probably a different way of the way you're looking at spending. So that was for us a challenge, but also a good, necessary challenge. I built this company completely bootstrapped. Up till this point, we still haven't raised external funding, and
Which
I
is
also think
quite impressive, by the way. Well done. That's quite an achievement.
Yeah, it's good, but also, like, going back to that resilience point, you get to a point where you are being in a market like the US, right? Speaking of advice, you definitely want to have enough capital to support growth, because here is not about, do you want to grow, 5-10% a year, and what kind of business do you want to build, right? Like, do you want to be in a space where, you grow steadily and, you're kind of course, profitable, you don't take external money, and perhaps that's fine. A lot of businesses do that depending on what you do. Or do you want to grow, 200x a year, and you eye a specific exit, right, within 5 years, and then you need a lot of growth, you need a lot of capital to grow. So that may change for us as well, just to mention, because I think being in this market, it's a huge opportunity. We are in a space that is very new, and we are at a very interesting pivotal stage with media capital. We're getting a lot of interest, and I think what we need to do right now, this clear product market fit, we just need to double down and grow fast, right? That's the stage we're at. And then I think in terms of challenges as well, it's just consumer brands, I think, because of all the different challenges we're seeing in the media space, and also the fact that a lot of these companies were challenged when it comes to fundraising. You probably see this too, but in the last 5-10 years, we've got this wave of D2C companies, brands, that started a consumer company, at a fractional cost compared to, let's say, the previous ones, the decade before, because there's a lot of technology and a lot of resources out there that allows you to start with a lot less funding. But then what happens, they're grown on digital channels, relying 100% on Facebook and Google and Amazon. And then when we come into play and we're trying to make the case for brand advertising, which has always been the case for, a lot of the unicorns out there, that's essentially how they propel business, right, to TV and mass channels. They're like, oh, we don't need that. It's always a tough conversation to have, because there's a lot of education that needs to be done, right? Why you need brand advertising in your media mix. So all of these different challenges, I think, made it. We achieved a lot in the last 3 years. We've done a lot of programs. We worked with 24 companies. We raised this initial close of 30 million. We already started deploying, but we're still having these conversations. So we're not even making the case for media capital. We have to make the case for brand advertising before we get into an investment conversation. But it's a challenge, but also a very interesting space to be. I think there's a lot of innovation that is going to happen, not only in the media, but also with this model itself.
And also, if you think about it, it's probably a lot better tracking as well. Because I'm thinking the type of data and the type of feedback you get from consumers on your phone. Nowadays, your television actually gives you the same type of feedback as well, right? Because they're smart TVs, they're connected all the time.
Exactly.
The amounts of data they capture is insane. It's absolutely ridiculous. If I'm an advertiser, which is a bit scary. I actually have a very old television which doesn't do any of that, doesn't connect to the internet apart from just going on Netflix, and that's kind of it. But yeah, if you buy something from Samsung, for example, they have so many points to pick up on you. They know exactly who you are, and then all the ads after you watch television for a bit, they all completely retargeted just for you. So it's a fascinating.
We were discussing this. It is, and you're perfectly right. And this is actually one of the probably preconceptions that TV is just linear, right? And then yes, there are challenges with measuring, but even within a linear environment, you still have a lot of innovation and measurement platforms that allow you to track and attribute the revenue and the success to that TV campaign. But then you've got a whole realm of connected TV, addressable TV, which is very much closer to how you would probably measure your programmatic advertising. But you mentioned, there's a lot of data points. I think this is the challenge, right, for a lot of the CMOs. What data do you want to measure? What data points do you want to track? What do you want to measure, and how are you going to analyze the data to give you actual meaningful results and insights? Because the more data you collect, I think you find yourself in that conundrum of what kind of data points should I listen to? And it's tough when you've got TV and digital channels on the side, and then you bring your out-of-home partner, and then you're like, okay, so how am I going to build this measurement strategy across channels, right, to have an omni-channel approach? So it's a continuous battle, I think.
Ideally with unlimited budgets, right? That's the speed where you want to be. I have unlimited budgets. I can spend in anything. So
this is what we're trying to also achieve here, right? And address, because a lot of the companies that come to us is because they want to optimize their marketing spend. So in the end, that's what we do, right? By investing advertising space and predominantly TV, we move the marketing costs from their P&L into their balance sheet. So that allows them to extend their runway. In some cases, they might actually reallocate budgets to other operational costs or product growth or other specific key areas of the business. But also, it's not just about the financial, it's also about the expertise, right? So we tend to be quite a hands-on investor when it comes to deploying media. We're not hands-on in terms of, we're a minority investor, so we don't really take board seats. Probably in some cases, we may look at observer seats. But when you come to us and if you're getting an investment from Media for Growth, I mean, that's just not enough for you to ensure success of a campaign, right? Then you got to look into, okay, who's going to do the media plan? Who's going to be doing your creatives? How are you going to measure, right? As per your point. And then on top of that, you're probably fundraising as well. So all these different things, rather than letting the founder do it on their own, we have this specialized growth sprints that we run multiple times a year. We do the investments and then they get exposed to a whole set of partners. So we have, for example, a dedicated media planner in-house, which is trying to address, some of these challenges. How do you create a media plan? How do you measure? What do you want to look out for? What are your objectives? Where you should be spending your money, right? And how much? So I think it's not enough to just think about just budgets and money, but it's how do you actually want to do it in a very optimal way, and what other areas of this whole campaign do you need to get covered, right, in order to sustain that momentum.
Strategy is as important as ever. Diana, if people want to reach out to you and find out more about the amazing things you do, what's the best way of doing that?
So I'm on LinkedIn. We publish a lot of research, a lot of case studies, a lot of investments that we do. So LinkedIn is probably best. But also, if any of them are interested in either knowing more about our investment thesis or just the model itself, they can reach me on my email address as well. So it's diana@mediaforgrowth.co. If not, then LinkedIn is always a great place. You can just drop me a message.
Dan, it's been an absolute pleasure having you on the podcast. Thank you so much for your time.
Thank you so much. Thanks, Ricardo. It's been a pleasure as well.
The podcast is also sponsored by Notion.so. Notion is offering 6 months for free for new users. Make sure you check out our website, thestartupevents.co.uk, to redeem this offer. This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup, from grants to investors to tips and tricks on how to be successful in your startup. This podcast is also sponsored by ODEV Tech. ODEV Tech is your premier software development partner. Make sure you check them out at odev.tech.